Our final panel this morning will be tackling the issue of which blockchains or blockchain are best suited for the issuance and trading of security tokens. Moderating, we have the hosts of the Crypto Street podcast, with which no doubt many of you are likely familiar, given that they have listeners in over 150 different countries. I've been told that their names are Killer Whale and Prince, but I'm not sure if that's true. Nonetheless, please join me in welcoming them both to the stage, along with the panelists.
What's up, everybody? Thanks for being here today. Thanks to Start Engine for having us here. I'm actually Dale, not Killer Whale. He is not here. So this is another co-host. It's Prince. So we're going to I know you don't want to hear from us, so we'll have each panelist introduce himself and say a little bit about them. Go ahead.
Fred Krueger. I am heavily into the EOS ecosystem. We make the leading wallet on EOS called EOS Lynx, and very interested in how securities tokens, along with all the other tokens that you might have in a wallet and you might use for things that might resemble apps, can coexist.
Hey everybody, I'm Boris Reznikov, Director of Partnerships at Interstellar, which is the new combined entity after our acquisition of a company called Chain in San Francisco. So we work to commercialize the best possible asset issuance projects on top of the Stellar protocol, as well as build products on top of that protocol.
Hi, my name is Mike Belshe. I am founder, CEO of BitGo. BitGo is a security scalability platform for digital assets. We support about a dozen coins or almost 100 tokens, I suppose. And we've provided non-custodial and then recently custodial solutions for those tokens. Custodial meaning a qualified custodian, regulated division banking, to try to bring digital assets to institutional investors.
Awesome. Thanks, guys. So we'll get started here. First question. Ethereum's gained a large market share of token issuances, but options are becoming more and more available as the space progresses. Now, I'm curious to hear what your thoughts are on platforms that are coming into fruition. Are they going to be better off maybe than the Ethereum chain, do you think? And what are your thoughts?
Well, I'm heavily biased, so I started out as a developer on the Ethereum platform. I developed on the Ethereum platform, and then I gave up on the Ethereum platform. I'm here to tell you that Ethereum does not work, that if you are looking at developing on the Ethereum platform, you should stop looking. You should look at EOS, because that's a viable platform, and you can build something on EOS. Stellar is also a viable platform. You can build something on Stellar. You're not going to be building something useful on Ethereum. And I think if you just look at the numbers right now, there's a great site called Blocktivity, and it measures how much transactions per day all these blockchains have. Now, EOS is all of 4 months old. It has 1.5 million transactions a day on it right now, which puts it, I think, in the top. It sort of changes every day. But Ethereum is kind of tracking about 500,000 transactions. So right now, you're at 3x Ether, EOS is. Stellar is about the same or higher than Ether. I'm not sure today, but these are fast platforms. Stellar's a fast platform. EOS is a fast platform. Ether is just not a fast platform. So those are the things that I would look for: is how fast is it and how low are the fees. Stellar has 0 fees. EOS has 0 fees. That's what you want in a platform.
Yeah, I have a slightly less pessimistic view on Ethereum particularly. I think it's a super powerful platform, but it's important to consider what is it built for? What is the primary use case for this system? And for Ethereum, it was never to process fast transactions and to do a bunch of token issuance. It was to create a world decentralized computer and power fairly sophisticated decentralized computing, which I think it's quite good at. So for example, if you want to build a prediction algorithm that's fully decentralized, Ethereum may be a pretty good platform for that. But if you want fast, cheap efficient transactions, then I think most of us would agree that it's not really well suited for that use case. I'm obviously also heavily biased. I've been on the Stellar side of things for a long time, and I think you need to always remember what the platform was built to do and choose accordingly.
Well, I don't have any skin in the game. BitGo supports a number of various chains, so I think the technology is changing so rapidly and so quickly. The idea that any of these chains are the final chain is not true. They all need to update, they all need to change, they all need to take into new considerations as we go forward. So yeah, Ethereum was here first, right? So of course it gets a lot of the traction, but the scalability issues have been seen. I've sometimes said it's one viral app away from completely failing, and we've actually seen that, right? CryptoKitties, for instance. It doesn't mean it's not fixable, but it's a big challenge.
Yeah.
What role or roles do you guys see smart contracts having in the securities and financial services?
So I think one of the most amazing things about these smart contracts as used in finance is going to be for DEXs, right? Mm-hmm. So I think if you look at a traditional custodial exchange, right, basically it all works on the basis of send me your money, me being an exchange. I will then try to match your orders, and then a week later, an hour later, whenever your order's matched, I'm going to then either credit your account or send you something back, right? I think that's just it's not really the best way to operate. A much better way to operate is to say, don't send me your money, send your money to a smart contract. That smart contract is going to say, I am looking for a buyer of my security at a price P. Now, if the matching algorithm determines that this thing should be executed, then let's match the smart contract, and then once that's happening, the smart contract just distributes the money back to both parties. And that is the way a DEX should work. There's a lot of things calling themselves DEXs that are not DEXs, but that's the way a DEX should work, and with a fast blockchain, that is the way a DEX does work. And that is a revolutionary way that has all kinds of legal implications as well, because there's no central authority that's holding the securities. So I think that is the future, and I think that we're going to see DEXs applied to all kinds of things in the future.
Yeah, a lot of people get really excited about this concept of smart contracts and programmable securities. I think that's a lot of the reason why folks are here today. I have a bit of a contrarian view on the role of smart contracts, particularly in the digital security space. Our view, and mine in particular, is that trade restrictions and issuance restrictions should actually live off-chain. They should be written in an off-chain program that then utilizes multi-sig, native multi-sig functionality to enforce those trading restrictions. Because though a programmable security may reduce the paperwork and legal tediousness of a security issuance, it does come with its drawbacks, which is that it's extremely hard to write and it's very hard to maintain over time. And so we've seen this with some of the early ERC-20 based security token issuances. They ended up having to be taken off the market and upgraded, so to speak, which takes a lot of time. And the reason for this is that Solidity is a very difficult language to work with. And making changes to these restrictions and smart contracts is very difficult over time. So we think it's a much easier way to go about it by having these restrictions be enforced in an off-chain signer service or rule set, so to speak, that's then enforced via multi-sig.
Well, I think smart contracts are coming, but they may be farther off than we hope them to be. For small amounts of money, just getting started, nobody's trying to tear you apart. But I mean, hacking is a global problem. It's a worldwide problem. Security has been elusive to computer professionals for decades. We have not cracked this nut. It's not Solidity, it's humans that are the problem. We do not yet know how to write secure code quickly and cheaply. The challenge with smart contracts, in my opinion, is that it kind of moves up to the application layer code, which is critical for moving around money. And I am quite certain that this is a difficult problem for the best of the programmers out there, and it's even more challenging for folks that may be from all kinds of different backgrounds, not quite ready to be dealing with programming of money.
I'd like to say one thing about this is that I think it's almost always a bad idea if your application is writing its own smart contract, because these things are like mixing nitro and glycerin together. The chance of you forgetting something is, and I'm a programmer, is really high, right? So I don't see any reason why anybody who's doing any of these things should actually write their own smart contract. On the other hand, I do believe that marketplaces that are built on standardized smart contracts, and a good example of this is IDEX, right? Which is, for example, the largest, and I just talked to the CEO this morning. Yeah. He might be in the audience. But anyways, Alex from IDEX, IDEX is it's a smart contract driven marketplace. And, I think once you've got the smart contracts determined, you don't change them. And so what I think is useful is the fact that this marketplace exists, and it's, it's doing, 3,000, 4,000 daily uniques a day on IDEX.
The most used app right now, yeah.
It's a use case, right? So I think it's, I think it works, and I think, it's just like I don't think you need to redo these smart contracts every time. You just need to use them once properly.
But you do need to be able to adapt them over time as regulation changes and jurisdictions change. And this is very hard to do when you have a smart contract that's etched in stone.
Well, it isn't. So, and that's one of the advantages, again, of EOS, for example, is smart contracts in Ethereum are etched in stone. Smart contracts on EOS are not etched in stone. Right. So just that's a start. You actually can write over a new smart contract on EOS. So that's just one thing. So you can make these things multi-sig, and you can make them so that some random programmer can't recode it, but they don't have to be etched in stone either. So I think that the smart contract architecture is the right architecture for these things. I think it's incredibly powerful, and I think that you are going to see more enterprise level products that use these smart contracts going forward. So I don't see any problem with them, and I do sort of see them.
So I think right now we actually see a world of a lot of hybrid models where you've got a smart contract on one hand, but you've got legal paperwork and backstops in case it should fail. And that might be a good set of crutches to be used while we figure this thing out. It also provides some portability across chains should one chain prove not to be the best, right? So anyway, it doesn't have to be all or nothing smart contract.
And another thing also I would say with these smart contracts is if you look at, for example, famously a lot of people have said they're not smart and they're not contracts, right? So, which is true, but one of the things that you'll say is a smart contract an agreement? The fact that I press the button, does that constitute an agreement? Now, with EOS, one of the other innovations of smart contracts is they've added this so-called Ricardian contract layer to the smart contract, which says this is what you're agreeing to in plain English, in English that a lawyer would agree is a contract, right? And so you have to do this in an EOS contract.
You met a lawyer that would agree?
Sorry?
You met a lawyer that would agree?
Yeah,
Ever?
well, I mean,
Really?
that is, if you look at that is, Thomas Cox, who's sort of the head of the.
Oh, he agrees with himself.
Sorry?
He agrees.
Well, I'm saying there are many lawyers who would agree, who would agree on this, but so yeah, so obviously you may need to back it up with other legal opinions and other stuff as well, but there is a step in that direction to make smart contracts readable, which does not exist on Ethereum.
So how do you gentlemen see the role of decentralized platforms in the tokenized security space? Is, decentralized platforms, it's kind of it's a big buzzword, right? Decentralized. Do you think it's a necessary thing for tokenized securities?
So I'll take it. I see two big advantages. First off, the number of digital assets that are possible is basically infinite, right? So, getting an investment banker to take you public on some traditional marketplace, obviously a very, very high bar, a lot of capital required, et cetera. Now we have the ability to do a lot of different things. So you're just not going to be able to get listed on everybody's centralized exchange or even centralized, front end to a DEX. But having the technology is going to enable everybody to get listed in various places. It's going to allow different exchanges to come up that have different types of specialties and things like that. The second thing it does is it brings power to the individual. So, I mean, much in the ethos of transparency and individual ability to hold assets, you can now do that without the middleman. So that's hugely valuable. The challenge there is that it turns out, not having a middleman when it's a small amount of money, no problem. But when it's a large amount of money, we all care. We care about what happens to our assets when we die. We care about what happens to our assets, in terms of fire and theft and forgetting our passwords and our two-factor auths and all that. So, but anyway, DEXs are tremendously powerful in terms of removing those middlemen.
Yeah, I think the importance of decentralization in the context of digital securities is actually considerably less than, in the times when we were talking about Bitcoin and Ether and non-securities. For some of the same reasons that you just mentioned, which is if somebody loses their private keys, there's a fiduciary duty to be able to give them back access to their assets. And my view is not that it's decentralization, which is the real innovation in terms of digital securities. It's the token as a format. The token, the format, having a security represented in the token format creates opportunity for interoperability, and that's really what's missing.
I'm a big believer in decentralization of the token, and so I think kind of maybe part of your point, which is I think the big innovation here is that I have these tokens, they're mine, they're in my wallet, and I can potentially give them to somebody else without any permission, right? And that is, I think, the fundamentally new thing with crypto, right? It's the fact that these are my tokens and that nobody can take these tokens with me. And this is this is really where I think the securities thing needs to go, which is I need to be able to give. I bought a piece of a condo, which is now securitized, and I now need to go and pay you back for lunch with a little piece of that security. How do I do that? And maybe I have to wait a year and a day, right? Maybe I have to do that. Maybe it's gone through this Reg D, but I want to know that I can actually just transfer that to you, and that from there it can just be transferred, right? And that's sort of the vision I think we're all trying to get to. And in my opinion, a lot of these regulations need to be rewritten because, that year and a day, it might have made more sense 20 years ago, but maybe not. Maybe it doesn't make sense, going forward. And I would like to see a world where these securities are a lot more fluid than they are. And I think as we talk about the tokenization of assets, where we really want to go with that is we want to go make these things fluid. I would like to buy a thing, I'd like to give it to you. I'd like to do that. I'd like to move things around much more easily. And that's what tokens are supposed to do, And they're not just things that should only live in an exchange. Like, that to me almost has no value, right? Because if this token represents a share in a condo, but it only can trade inside the condo exchange, what's the point? I mean, what have we done here? We've just called it tokenization, but we haven't done anything.
But we have decentralized money traded on the most centralized exchanges ever.
Right.
That's what we have.
That's not that great. That to me is not a order of magnitude improvement in technology.
I'd say it's backwards.
I think it's backwards.
It's actually loss. Right?
Yeah.
There's tremendous learning about insider trading, self-dealing, failure to provide, best execution, all kinds of cheating that happens when you've got one party that controls all elements, right? So you got to take that away.
Exactly, and that's that interoperability that I was referring to earlier, which is that we're driving towards a world where we can have one ledger or maybe a few ledgers that are home to a wide variety of asset classes, whether it be real estate or commodities or private company equity, that can all be traded between each other and fiat currency and cryptocurrency and what have you.
Yeah, I mean, look at, I mean, that's the, if you look at the Stellar platform, right, that is exactly the premise, the goal that the Stellar platform is saying that you're, trade between all these currencies, trade between all these different things,
Exactly.
Trade between the token that entitles you to your son's band, Like, this is kind of where we're going. And you don't want to be like, oh, excuse me, do you have your Reg D for that performance of your son's band? I'm sorry, you don't. You're going to have to wait a year to see it, And that's the thing is, like, I think some of these regulations are getting in the way. They may have to be revisited or rewired. I know that securities law hasn't changed materially since 1933. But, the technology has now, right? So we have this new change in technology, and the securities law needs to change over the next, hopefully in the next 5 years, to work better with what this new tokenization enables us to do. And obviously we want to keep all the bad actors out. We don't want to have money laundering. We want to have AML, KYC. We need to figure all that stuff out. But we also want to have all this stuff be fungible. So.
Yep. But in the meantime, I think there's a lot of value that can be unlocked within the confines of today's regulatory environment.
All right, well, thank you guys very much. That's all the time that we got, so.
Thank you very much.
Thank you.
All right, everyone. Well, that'll make lunch, and I don't know about you, but all this talk of tokenization has got me mighty hungry. Just a few notes. If you're interested in participating in our sponsored lunch tables, you'll find those on the front drive. We also are serving lunch downstairs. We're hosting pitches from 4 different companies, and you can grab lunch right in your way to Wilshire 1 and Wilshire 2. We'll be back here promptly at 1:40, where our first panel back will feature the founders of Crowdfund Insider and CoinList. And then later on, we also have our keynote from Charles Hoskinson, and The Heist, where you can steal crypto from a painting. So we'll see you back here in just a little bit.